Welcome to our channel on accounting lessons with worked out problems, brought to you by an experienced accounting professor with a CPA. We have videos on all topics of introductory financial accounting. Our focus is on step-by-step illustration of a problem, worked out on a whiteboard. Please do not forget to subscribe. This lesson is about accounting related to preparing cash flow statements, and it consists of 3 videos. The first video will explain and illustrate the 3 sections of the cash flow statement and its format. The second video will illustrate the indirect method of preparing the cash flow statement. The third video will illustrate the direct method of preparing the cash flow statement. Please follow this order of watching the videos. Let us go into the first part of the video lesson.
What are the 3 sections of cash flow statement? First one is the cash flow from operating activities. This section shows the cash flows from regular, normal business operations. These include the collections from customers, clients, and then payment to suppliers, employees, taxes, etc., etc. These are the activities that the company goes through in running the everyday business operations. The second section is cash flow from investing activities. This shows the cash coming in and going out from selling and buying long-term assets. Example, buying and selling land, building, machinery, equipment, investments, they all go in this section. Third section is cash flow from financing activity. This shows the cash flows from long-term liabilities and equity accounts. Examples, borrowing a loan for a long term or repaying a long-term loan, issuing stock, repurchasing stock, paying dividends, they all go in this section. Now, this is an illustration for classifying each activity as operating, investing, and financing. We are going to go through this illustration in this slide. Payment to suppliers. This is a normal operation, so it belongs to operating section. Repayment of long-term loan would be a financing section. Paying dividends to shareholders will also go into financing. Selling an old machine, this would be investing because the company is selling a long-term asset. Issuing stock is financing. Payment to employees, operating. Collection from sales, operating. Purchase of a building would be investing. Paying the interest on loan would be operating. Issuing bonds payable, that is, the company is borrowing long-term by issuing bonds, financing. Now, the non-cash financing investing activity. Sometimes this non-cash financing and investing activity will be reported in the bottom of the cash flow statement. These are the activities of transaction belonging to the financing and investing section that do not have any impact on the cash account. This will be listed and explained at the bottom of the statement. What are the examples for the non-cash financing and investing? Say the company is buying an asset by taking a loan or issuing stock. So there is no cash impact here. So here you will be debiting the asset and crediting the liability if the company is taking a loan. Or if the company is issuing stock, you will be debiting the asset and crediting the stock account. So here the cash is not involved. So this activities will be a non-cash financing or investing activity. Another example can be, company can issue stock in order to pay off the loan. So instead of paying back the cash to the lender, the company will give out its own stock. These are some of the examples for non-cash financing and investing activity. Now the format of the cash flow statement. We start with the cash beginning balance and then we will add the net cash from operating. If it is a positive amount, and if the net cash from operating is a negative amount, we will subtract. The same thing we will do with the net cash from investing and net cash from financing. If the net cash is a positive amount, we will add, and if the net cash from these sections are negative, we will subtract. And then after all this adding and subtracting, we will have the cash ending balance. And this cash ending balance will go as the cash account balance in the balance sheet.
Thank you for watching the first video lesson describing the 3 sections of the cash flow statement Q&D its format. The second video lesson will illustrate the indirect method of preparing the cash flow statement. We have video lessons with worked out problems on all topics of financial accounting. Please do not forget to subscribe.